Yo, what's up, boys? Zoran Trades here, and today I'm going to be exposing PB Blake's MECH model. So, this is PB Blake. As many of you guys know, he is one of the traders at PB Trading who taught the other one how to trade, and he's basically the creator of this model called the MECH model, which is currently one of the most traded models that you will see. And pretty much every person who you're seeing trading ICT concepts on TikTok right now is trading one or another variation of PB Blake's MECH model. So without further ado, let's get into it. Why is PB Blake's MECH model so profitable over other models, and what is it based off of? So first of all, these two questions have the same answer, and they're both answered by the fact that price is always looking to seek out new highs or lows or to rebalance inefficiencies. So what does this mean? Price is always in a state of doing one of two things. It's either looking to, in this case, seek out these new highs here, and maybe some other highs are back here, but for now we can just leave it at these highs. If we look at a market, right, just in this situation, we are looking at, there's only two things that the market is ever doing. I'm going to mark them out red and green. Here we are seeking out new highs, which is red. Oh my gosh, I can only make it one thing. Okay. Here we are seeking out new highs, which is red. Bang. Bang. And bang. And here we are seeking out internal inefficiencies. Bang. Bang. Right there. So we can see on the way up while we're doing sweeping highs, and on the way down we were just tapping these fair value gaps. That's all price is ever doing. Whenever you open a given chart, unless it's obviously literally just consolidating sideways, it's always going to be sweeping out new highs or lows in the market, or rebalancing these inefficiencies. And combining this with a few more concepts that help us understand where the market's going gives us a very, very high win rate if we use this properly to our advantage to understand where price is actually going. So in this situation, the way that the MECH model will be traded, which I'm going to show you guys a lot of examples of, is the fact that we are going to be trading higher, for example, and let's just say we have an intermediate term high up here. Strong one, let's just say it's previous day high, resting inside a 4-hour gap. Once this zone here gets swept, once this level liquidity point gets swept, right, we are, regardless of price being bullish or bearish, we are expecting a slight, if not somewhat big, reversal from this level, at least a reaction. And as we can see on the way up, what have we been doing? Taking a high, sweeping retracing into the fair value gap, pushing higher. Taking highs, tapping the fair value gap, pushing higher. And in this case, for the MECH model to be valid, we need to have an unfilled 5-minute fair value gap below as either a target or a break-even point. And what this allows us to do now is literally just read the market from the 4-hour intermediate term high. Where is price likely to go? If we inverse this leg here, because that is the way the model is played, we wait for the highest time frame inversion in this leg here. What does this mean? This tells us that if price were to have taken this draw and wanted to continue straight higher, we would have more than likely used that manipulation leg fair value gap to go higher. But if we are able to flip it and order flow is able to fully reject that gap, from that point on, the next draw or target or magnet where price should go to, because when you hear the word draw on liquidity, that means that there's literally a draw there, there's a magnet, and you're holding metal below that magnet, and it's going to get drawn to it the same way it happens with a magnet. So after this fair value gap here gets inversed, we can expect price to do what? Fill this fair value gap. And after it fills this fair value gap, we will either be break even on our trade or use that as a take profit. And based on the fact that we are trading off of this higher time frame PD array here, this is, regardless of bearish or bullish sentiment, this is a strong reaction point. If we enter off of this inversion with our stops at the highs here, we can either target this fair value gap, or if we get a worse entry, we can target through it and hope that it flushes. And if it doesn't flush and we are wrong about our trading idea, price will then go to the 5-minute gap, at which point we go break even and then stop us out for break even, which is no problem. Free trade, risk-free trade, definitely a situation you want to be in. Other scenarios, what we push right through, and I'm going to show you guys this again a little bit clearer down here. So here are the 3 examples of what price could possibly do when sweeping out a strong draw on liquidity. In this case, I'm going to use London high. Down here, what are we doing? Respecting a 5-minute gap, respecting a 5-minute gap. And now we leave this 5-minute gap down here, right? After sweeping London high, let's just say we get a 1-minute inverse to the downside. In this situation, we can target this 5-minute gap, right? That's more than enough for us. And before price sweeps higher and resweeps this high, at minimum, we should see that unfilled 5-minute get filled, because it would use that to go higher. But if it doesn't get filled to go higher, no problem. We're already short. It just flushes right through, uses it as low resistance liquidity and pushes right through it. In which case, we are prepared for that situation. And there's only 3 situations that can actually technically unfold, and 2 out of 3 of them we are, with this model, we are prepared for them. And the other one, which we are not prepared for, I'm going to show you guys why that is the least likely to play out. So again, in this case, this unfilled 5-minute is price's next objective, and once we meet it, we are break even, if not fully out of the trade. Next example here, we have high sweep, 5-minute gap. This part of the trade is not necessary for the trade. It's not like you have to see it respecting gaps. It's just makes it easier to see, and we can, obviously it's a good sign. So here we are respecting these 5-minute gaps, and then what happens here? We sweep London high, we inverse, and then we can go short. We now target this 5-minute gap as our take profit. And what happens? We were wrong about the trading idea. This was not high of the day. We expected this to be high of the day, but it wasn't. It gets reswept. It gets traded higher then. But what did it use to trade higher? Unfilled 5 minutes. So again, break even, if not take profit. So these are the 2 most likely scenarios, just based on how the market moves. It's almost always going to sweep and rebalance the inefficiency after sweeping the higher time frame high, or just strong draw on liquidity, right? And now the last example is here, which is the least likely, because of the fact that if we're using any kind of narrative for this, let me just make sure my OBS is still recording. Yes, sir. If we are using any kind of narrative for this, okay, obviously if we're super duper bullish and there's no reason why London high should cause a reaction, then yeah, of course, this is not a trade that's just going to work. But if this is a point that's aligning with what the higher time frame is actually doing, and we would expect to see a reversal here, this is very unlikely to happen. After sweeping maybe a higher time frame fair value gap and London high or Asia high or something, and we have an unfilled 5-minute down there, this is very, very unlikely to happen, and this isn't something that's going to play out often. And again, when this does play out, this is just the losing side of the statistic. If you have a 80% winning strategy, the 2 out of 10 trades that you lose are going to look exactly the same as the other 8. There's not going to be some difference before you enter. You can't hold yourself accountable for every loss, because they're going to look the same. It's not like there's a 100% win rate, and that is what would happen here. But the reason this model's win rate is so high is because in order for it to lose, something has to take place, which is very, very unlikely, being a higher time frame reversal point gets hit, and the unfilled 5-minute that it would use to somehow push higher also does not get filled and then gets pushed through. Then I'm going to show you guys a very, very clean example of this. Today's price action was just disgusting, so I'm going to go to yesterday. Don't have to get all 4 actually now. Do have to get all 4. Okay, but here we go. Thursday. Okay, so coming into the day, very, very nice. What did we have here? We have this 4-hour intermediate term high. Perfect. Lovely place to take a trade from or take a trade towards. But in this case, we're only going to focus on the trade from it. What is this? A high plus delivery out of a 4-hour fair value gap. So now what am I going to do? I'm just going to see, of course, realistically in this situation, we are looking for a trade higher first. I would personally first and was looking for the continuation higher, but I didn't get an entry, which is the reason I used this model. But now I'm just going to skip ahead a little bit. And as we see, I only enter off of 5-minute fair value gaps minimum, so I did not get an entry here. Let's just see how this plays out. So if I press 1, does it only do 1 candle? Okay, bang. What do we have here? We have this high. Oh, why is this high so high up? We have this high being swept. And we have, so after this high it gets swept, what do we have? We have a 5-minute fair value gap. Okay, in this situation, this is a bit fucked because the replay doesn't work properly. So we can already see what this 5-minute candle does. But remember, in this situation, we don't know this. We're still trading up here. So once we're trading up here, we have this unfilled 5-minute below price, right? So in this situation, if this fair value gap gets inversed, right there, we can then short into this gap because there's only 3 things that will happen here. Remember, we sweep this, we flush all the way through and flush down to these lows here, right? We flush into the fair value gap and use it to push higher, or we somehow inverse this and then just flip straight back up, which is the least likely out of them. So I can give it 1 candle and see what happens. Do we inverse? Yes, we do. So now is when I place my short position. I can go stop loss at the high, and I'm going to target the midpoint or as much as I need. You see, I personally like to take 1-to-1 risk to reward ratio trade, so I only targeted a higher part of this 5-minute gap, but you could have targeted as much as you wanted. Just going to mark out this 1-minute gap as an IFVG quickly so we can see exactly what's happening. So from this point, in this exact situation here, with this candle looking exactly like this, the next 2-3 candles, I'm at least expecting them to displace into this unfilled 5 and then either use that to push higher or just go down and sweep all of this sell side liquidity out. But either way, up until about equilibrium of this 5-minute fair value gap, you should be safe. But I like to take the low-hanging fruit, so I will only take a 1-to-1 risk to reward ratio if I need to. And here we go. Let's see how this trade plays out. Beautiful. Bang. Delivers, I'm pretty sure, yeah. Okay, here we delivered straight to the low, but that is a perfect MECH model setup right there. We could have held it all the way, didn't need to. We had equilibrium of the 5-minute gap tap. That's way more than enough RR for the day. Beautiful setup. And again, what did we do? We were respecting this 4-hour gap, respecting the high that we had just swept inside of it, and then, well, it was actually not a 4-hour high, it was a 1-hour high here. But we were respecting the high that we had swept inside of it. There's actually another 1 hour up here too that had been unfilled. Didn't even see that yesterday, but okay. And yeah, pretty much perfect delivery off of this level. So we can see this is exactly a perfect example of the fact that once this candle had played out till here, right, we're BE, we are break even in this 5-minute. Whether you're taking profit there or not, minimum, this is break even, right? So if price had decided to reverse from there, I'm already out, right? My take profit is here for a 1-to-1 R. So if price had decided to just slightly fill the 5 and go higher, I'm out, I'm good. And if not, if I am targeting equilibrium and we don't hit it, I'm break even. So that's a risk-free trade. And you guys can go back test this. This is a very smart model because of the fact that it's built on ICT concepts which already work really well. And then Blake must be a pretty smart guy to come up with this, because he clearly reverse engineered it around how the market moves. But yeah, boys, I hope this was helpful, and let me know if you guys have any more YouTube video ideas you guys would want to see me cover. And make sure to check out my Instagram along with my free Discord server. I have, for 3 more days, if you join that Discord server, I'm going to be giving away the paid live trading role for completely free. So make sure that you guys trade there. And if you're seeing this video in like a few months and that's not available anymore, I'm sure it's still, not I'm sure, I know it's still a great place to be if you're learning how to trade. So, and it will always be free. So just make sure that the Discord will always be free, not the live trading. But just make sure you guys are in that Discord, because I'm obviously going to do a lot of giveaways and stuff there too as well. So, yeah. But yeah, boys, I'm going to see you guys in the next one. Peace out.